Okay, guys, so just going to do a quick stream here with an update because there were rumors over the weekend reported by a mining blog that Barrick Gold and Randgold resources were going to merge, but the announcement just came today that the announcement that is official. And so I wanted to, get my comments out on this. And if you watched my video, which I spent over 5 hours total of work releasing about the primary silver miners, the same exact stuff goes for the gold miners, the primary gold miners. And that's basically that even for the large producers, the large and low cost producers, they are running out of ways to cut costs. And this merger between Barrick Gold and Randgold Resources, it proves my point. And it's probably going to happen with primary silver miners, except that a lot of the people in the who run primary silver miners do not want to lose their salary. They have stock options, they have cushy salaries, and there's a bunch of waste and fat. Rick Rule of Sprott has talked about this for years now, that at a lot of the largest mining companies, especially ones that are not run by the owner-entrepreneur types, the person who founded the company or who owns the majority of the shares, that there's a lot of waste from the companies that are run by the manager-operator types. So eventually you will have to see the primary silver miners probably, because as I've tried to demonstrate at length here through my videos, whether it's the Barrick Gold case study that I did about 6 weeks ago or the in-depth video on the 3 largest and lowest cost primary silver miners that I released over the weekend, that even the largest and lowest cost primary gold and primary silver miners are running out of ways to cut costs. And I'm going through the PR here on Kitco, and what I'm learning from the PR on Kitco is that surprisingly this is an all-stock merger and there's no premiums. So this tells me that this was basically done out of desperation. So basically you have the CEO of Randgold Resources, who's going to be the new CEO of the combined company, and the CEO of Barrick Gold saying that, you know what? We've cut all the costs operationally at the mine site that we can cut. Barrick, as I've tried to state at length, that Barrick Gold just does not have the all-in sustaining cost range that they're claiming. And that basically the only major costs left for the primary gold and primary silver miners, the only large amounts of waste and fat that can be cut anymore are the SG&A, which for those of you who are not familiar, is the selling, general, and administrative expenses. That's it. So, what you should see, and I don't think you'll see this immediately, maybe out of desperation in the next couple of years, you'll see the primary silver miners, is you should see companies like Coeur d'Alene and maybe Hecla merge, but you probably won't see that immediately because there's so much waste at those companies. They're not really efficient miners, especially compared to like Pan American Silver and Fresnillo. They have quality assets. Hi, Rob. Well, I'm just getting out this update quick, but I'm talking about the Barrick Gold and Randgold Resources merger because I did get some comments underneath my silver video about this, and you know what? This proves my point. That the miners, they've understated their costs, and for me, as I mentioned in the video that I released over the weekend with the primary silver miners, the 3 largest and lowest cost ones, it's a red flag that they are adjusting their earnings. So if you're not familiar with finance and investing, if you see companies adjusting their earnings, normally what companies do, even if they're not miners, is they say it's like a one-time thing. It doesn't affect, our cash flow. It's a one-time problem. If it's like a tobacco company, they'll say like, oh, it's a massive class action lawsuit. We're taking a charge now. It doesn't affect our sales or anything like that. But when you see a pattern, so normally with adjusted earnings, if it's just once or twice out of like many years, then it's not as big of a deal. But if you see a pattern of adjusted earnings, and that's what you're seeing out of even the largest and lowest cost primary gold and primary silver miners now, is that you're seeing adjusted earnings. Yeah, a lot of people have taken hits on mining stocks. I really don't own any mining stocks anymore. I don't consider Sandstorm Gold and Wheaton Precious Metals mining companies, though. So I sold my first Majestic shares a while ago. because I saw that they're having problems cutting costs and they were diluting for acquisitions. I sold it a while ago. And I bought more Sandstorm Gold shares for a disclosure. And obviously, you know, none of the stuff being discussed here, stupid disclaimer, is financial advice. It's just for informational and educational purposes only, and it's my opinion. So contact your financial advisor, do your own due diligence. But yeah, I'm only doing this short video for a little bit today. I just wanted to go over the Barrick Gold and Randgold Resources merger with you guys, and this proves my point, that there's no premium being paid. Normally, with a lot of mining companies, when there's an acquisition, there's a premium. And today, there was no premium. So this, to me, is fully a cost-cutting move, that the two CEOs sat together and they said, you know what? We're running out of ways to cut costs in our mines. We're running out of ways to maintain current production levels or grow them. We're running out of ways to economically replace the reserves that we've grown. And the only thing that made any sense was a merger, because then they could cut probably at least 20% for both companies when they merged of the selling, general, and administrative expenses. And that means basically when the two companies merged, that a lot of the vice presidents are either going to get fired at these mining companies. I think, you know, if you've been around the mining industry long enough, you've heard kind of the stories, and it's like this at a lot of large companies. There's a lot of waste, but with the mining industry, they're not consistently profitable, so they can't afford this much waste. But at the mining industry, the large mining companies, you've heard stories about all these extra vice presidents that have been around. So that's going to be cut. But there's going to be companies that are going to be reluctant to do that, especially, like I said in the silver video, a lot of these companies where the CEO and upper management and board of directors are not necessarily rich, and they need those cushy jobs with the high salaries and the stock options. So if they're not already wealthy, then they're not going to be as likely to want to merge with another company to cut their cost 20%, because then that means they're basically they may be firing themselves or having to take a pay cut. But this is, you know, this is a red flag, because Barrick Gold is one of the lowest cost primary gold miners. Okay, they've guided $765 an ounce to $815 an ounce. They should not need to cut their SG&A another 20%. So this tells me that I was right with my analysis on my case study, that Barrick was drastically understating their costs. That, you know, they're moving here to, and Randgold Resources too. Randgold Resources is another really well-respected producer. They have very good margins, pretty low costs. They're considered one of the top, you know, 5 primary gold miners in the world. Very, very well-respected. But, you know, this just means to me that the industry is out of ways to cut costs. Needs higher prices. Needs the oil price to crash and then stay there. Yeah, I know you guys in the comment section, for those of you guys who don't see this yet, once the video is done recording, yeah, there's some jokes in there about mining shares. Yeah, pretty much, and I've been speaking about this with friends, anyone since 2011 who's had more than 10% exposure to their to the gold and gold mining or silver has gotten killed. They've drastically underperformed. So anyone with more than 10% exposure in their total investment portfolio to gold and silver has drastically underperformed. A couple more points about the gold and silver industry I didn't get to mention. If you're a Real Vision TV subscriber, there's an interview worth checking out. There's a guy named James Rasteh, hopefully I'm pronouncing his name right, from Coast Capital Management. And he's a private equity guy and a value investor. And he's been trying as a activist shareholder, and he's been trying to force either mid-tier gold miners to sell the company that are being run efficiently. And according to his research, he says that over the last decade, $150 billion with a B, billion, $150 billion, this is the highest estimate I've seen. He says over $150 billion in shareholder wealth has been destroyed by the gold miners. And he says that the gold miners have, in spite of this wealth destruction, bad acquisitions, mines not being on time and on budget, you know, all this loss, that a lot of the gold mine CEOs have made many millions of dollars for themselves. And the other estimate I've seen, and I think this one's a little bit more credible, I think the $150 billion one may be a little too high, but, you know, I'd have to speak to him and get him to show some of his cost estimates there for why he thinks it's $150 billion. But the other estimate I've seen for massive losses in the gold mining industry is hedge fund manager John Paulson, and he has the losses and misallocations of capital at $80 billion. So I think that one's better. I think that one's more accurate, probably. That one may be a little too high, but it's close to 80 billion, I would say. It's tens of billions of dollars that have been totally wasted by primary gold and primary silver miners in bad deals and management overpaying themselves and waste. So we're going to, out of desperation, it looks like we're going to see these, even the largest and lowest cost guys are going to be out of desperation potentially merging. So I would look for that. This deal should be the first of many. Because what this tells me is even Barrick Gold, who's been paying off debt and repairing their balance sheet, they do not want to go to the capital markets. And, Randgold Resources normally has a solid balance sheet. They have a good reputation. And it's kind of interesting that they didn't want to go to the capital markets either. So I guess they realized that the only major way to cut costs that's left, because they've optimized all their mines as much as they can, and they've high-graded them and all this other stuff, the only major way to actually trim any more fat for these mining companies is to start firing mid-tier management and upper management. That's the last remaining piece of fat that can be cut. Paulson has picked ridiculous companies, so has Odie. Buy 100-ounce silver. Well, when you manage that much money, buy 100-ounce silver, you cannot buy every single company. Okay, so from a liquidity perspective, when you're a big money manager and you raise billions of dollars for a gold fund, there's only so many companies you can put your capital into. So it's kind of inefficient from that perspective. Well, Randgold was trading at a higher valuation because it's more respected. Its management team and its operations are more respected. Agnico Eagle and some of those other ones, they have very good reputations. I will answer some listener questions. This is going to be a lot shorter one. I just wanted to give you guys a quick update on this. Because, this merger is proving my point. I would like to also see, maybe Coeur d'Alene and Hecla merge and start firing their vice presidents and their mid-tier management, their upper management. There needs to be a lot of waste that's trimmed. A lot of fat that needs to be cut. I wouldn't be shocked if Pan American Silver merged with someone at this point. We are very close to true desperation mode. Because according to the financials and the investors presentation Barrick Gold was putting out, they are one of the 2 or 3 lowest cost, largest and lowest cost gold miners in the primary gold miners in the world, and they should not need to drastically reduce their SGA immediately. 66 Sigma. Any large company's management is over 50% fat. Yeah. For the most part, I agree with you. Now, you do have some exceptions to the rule. So you have companies that are run by the owner or entrepreneur. So in the mining industry, that would be like Ross Beatty. That would be Rob McEwen. That would be Keith Neumeyer and First Majestic. They're normally pretty good at that. Although, as one listener underneath the video I did over the weekend for silver said, Keith Neumeyer has done some bad acquisitions. I believe First Majestic Silver just wrote off the La Guitarra mine. That was a bad acquisition, and they put it on care and maintenance. But the business model, and this is the reason why First Majestic is a larger silver producer, is they do focus on acquisitions. So their business model is that they're aggressive with acquisitions. Not every company is like that. So with Coeur d'Alene or some of the other silver companies, instead what they want to do is go and buy a large deposit and then develop it themselves. But First Majestic Silver's business plan seems to be different. Thomas, miners need to cut off gold. Well, I've addressed this. The problem is that the miners need the cash flow because a lot of them have debt on their balance sheet and they're trying to pay off the debt. So if they need the cash flow, they can't stop production. So, and I've named case studies for this in the past. So up until the day, some of these smaller silver miners that went bankrupt, I think like Arcana Resources and Holdra Silver, which, with their project economics, they were supposed to have really good mines on time and on budget and be economic, but then they didn't hit the numbers. And up until the day, both of them went bankrupt and restructured. I believe they're still producing. So that's the problem with miners, is they have the cash flow, but they don't have the margins. They can't generate normally consistent free cash flow. They struggle to control costs. And then you would think rationally that they should cut production, but they need the cash flow. So the miners do not act rationally as you would think in the economic textbooks suggest, because they're not cutting production. But you are seeing this in the uranium market finally. So that's at least a good sign that now Cameco has shut down their massive high grade, the large and low cost mines that they have, McArthur River, and now Cameco's in the open. Cameco's like a uranium hedge fund, and they're in the open market buying uranium futures contracts and delivering those. So hopefully that will fix the supply demand imbalance in the market. I think eventually, Adrian, that the uranium market will have to correct. So the problem is everyone screwed up the timing on this. If you showed most of the people the argument for the supply and demand fundamentals, most of the people would be in agreement that eventually uranium would have to fix. The question is when. So Rick Rule's been calling this for 10 years. He has enough money where he can wait. Almost everyone else does not. And then, I was up fourfold on my Denison position until Fukushima, and then all the gains went away really quick. I think you're seeing that by 100 ounce silver. I think you're seeing the hedge funds come in and hold. So you just saw a new uranium fund in London that was popular, and I think that was from the resource hedge funds. So you are seeing more patient capital that is coming in and buying uranium spot or storing it and waiting. They're patient for 2 or 3 years, and they think they're going to be able to sell it at a good return. So I think you are seeing that. So that will eventually correct the uranium market. The question is then, are the uranium nuclear power plants going to restart in Japan, and is China going to bring new ones online because they haven't done so? Okay, guys, well, this is going to be a short one, so I have one more point I want to get across. So there was a listener comment in the last live stream telling me not to stop saying that government is bad and stop blaming government. Well, go and watch the Project Veritas videos that he's released, okay, about the federal government workers here in Washington, D.C. There is a lot of very hardcore Democrat government workers, federal government workers, and go and watch those videos and how brazen they are. So if you watch those videos and you think that those federal government workers are an exception to the rule, you're wrong. Okay, now not every single federal government worker is a hardcore Democrat socialist and is, running license plate numbers illegally, stuff like that. Not everyone's doing stuff like that. But there are a lot of them who are lazy, who are corrupt, who are... There's no political diversity in federal government workers. It's been weeded out the last couple decades. In the past, there used to be more Republicans who were federal government employees too, especially in the FBI and the Department of Justice decades ago. But that really got totally weeded out under when Bill Clinton was in the White House. That went almost there. They started paying off a lot of the Republican attorneys and Republican FBI agents to start retiring immediately. So this plan has been in motion for decades to stack the deck. And it looks like finally that let me get the lady's name here, Allison Raybar, who was actually going, she was skipping work and going on long protests, and she got in the face of the Secretary of the Department of Homeland Security while she was eating and, doing all this. She was using Department of Justice resources illegally to run license plates and other stuff on expensive legal databases. And it looks like she finally got fired. But there are a ton of people in the federal government who are not doing their job. It's at least 50%. So President Trump, and there's no way this will happen, he could fire 50% of all federal government employees and it still wouldn't fix things. That's how bad things are in D.C. There's tons of Wesley Mouches. And some of the people are even worse than Wesley Mouch because they're making way over $100,000 a year, and then they're hardcore Marxist or hardcore Democrats. They're hardcore Marxists or hardcore socialists, and they're enormous hypocrites. We're talking I've met people who have Che Guevara t-shirts, expensive Apple products, drive Mercedes-Benzes or new BMWs, and they can quote Marx chapter and verse, and they love it. So they talk relentless shit on capitalism and free markets and anything, blame all the problems for that, and yet, they're enormous hypocrites. And the federal government is a part of the problem. It's too big. There's too much waste. And, President Trump, he needs to restore rule of law. He needs to start drastically reducing the size of government. He's not doing it. And this is the budget deficits we're going to have blowing out with the supply side economic stimulus. It's probably going to take about probably towards the end of this year, but at some point it's going to hurt the dollar. Right now it's not. The dollar, the last time I looked at it, I think was still 94. It was still a little above 94 today. Adrian FCA2, socialists should go move to Venezuela. Exactly. There was a writer who was on Twitter, and she's a blue check mark, of course, and she writes for a popular like women's teen magazine, girls' teen magazine, and she was saying that, and there was also one for I think the Young Turks, and she was saying that socialism has never been done right. And then I told my buddy Jose Nino, who escaped to Venezuela, and he writes for the Mises Institute, and she made some stupid analogy about how socialism hasn't been properly baked or whatever, like a good baked good. And then me and Jose started making fun of her that, there are no baked goods in Venezuela because there are shortages on everything. Okay, so I'll answer listener questions really quickly, and then I'm going to get out of here and head to the gym. I just want to make sure to give you guys an update on my thoughts on the Barrick Gold and Randgold Resources merger. So there was no recap real quick. There was no premium, which is rare. Normally in an acquisition or merger, there's some type of premium. So this, to me, red flag means desperation. Both companies were looking at their own companies, thinking that they've optimized their balance sheet as much, they've optimized their mines as much as possible. There are no more costs to cut other than selling general and administrative expenses, which means the highest employee salary. That was the only way. And then in addition to that, you have a lot of people in the industry talking about peak gold. I've given my thoughts on that. It's not really peak gold, it's a function of price. So if the gold price was at $1,600, of course a lot more gold mines would be brought online. The problem is the gold price. And also the margins that the miners have right now for gold and silver. They just don't really have many margins. The silver miners' margins are even worse than the gold miners' margins, and look what Barrick Gold and Randgold Resources just did. So I would not be shocked in the near future, maybe even less than 12 months, to see Coeur d'Alene and Hecla or some of the other larger primary silver miners that have bought gold deposits in the last couple years to add more gold revenues to start to merge. Or maybe they won't merge. Maybe the management teams will run those into the ground and maybe go bankrupt, or maybe they will just continue to dilute. Because the history of some of these companies for dilutions, especially like Coeur d'Alene for stock dilutions, I think Coeur d'Alene, if you go back over the last 20 years, the amount of stock dilutions, I think they've done a couple reverse stock mergers and a bunch of different share dilutions. And that's why Coeur d'Alene hasn't gone bankrupt, because they keep, getting away with all that stuff. City Guy Abel, everyone long miners except for a few exceptions like the royalty and streaming companies, which are not miners. By the way, the royalty and streaming companies, the 5 largest ones, Sandstorm Gold has not gone up a lot yet this year, but the other ones have done pretty well on a relative basis. And the only gold company, City Guy Abel, that has done well basically is Kirkland Lake Gold. And that's because they have enormous high-grade discovery there at the mine in Australia, and that's allowed them to have robust margins and increase revenues and earnings. So that's bucking the trend, but pretty much all other gold and silver miners have not done well at all. And, the industry is in a bear market for 7 years. So anyone saying that gold and silver have been in a stealth bull market is they're not doing their homework, or they're lazy, or they're lying. Maybe they're paid to pump for a bullion dealer or something. Adrian, the problem with junior miners is that many of them cannot get capital. So maybe if it's a prospect generator, there are a few juniors that can get capital. I think the safest, and this is not financial advice, the safest way to play juniors is with Sandstorm Gold, because they have over 100 royalties on their portfolio, and they're buying more every month or two for cheap that the market is not valuing right now. The market is valuing most of those new royalties that Sandstorm Gold is buying from the quality juniors. They're buying them at zero. So when there is a turn in the market, when the cycle does turn, you will get probably revenue growth, earnings growth, and a re-rating for Sandstorm Gold. They do have the Turkey exposure, but they also have the Cerro Moro gold and silver stream coming online in January, and then also the Arizona royalty restart. That's by Equinox Gold, Ross Beatty. I think Equinox Gold, they're not profitable yet. They're rebuilding that mine. But I think Ross Beatty has a pretty good business plan for that. It's not financial advice, just my opinion. So I think Ross Beatty is putting a good amount of his own money into Equinox Gold, and he's bought. It looks like to me that I just saw the Real Vision TV interview with Ross Beatty that Grant Williams did. If you have a Real Vision TV subscription, it's an excellent interview. It's like 90 minutes long though. But basically, Ross Beatty is putting a lot of his own money into Equinox Gold, and during this bear market right now, as assets are cheap, Equinox Gold, backed by Ross Beatty, is looking to buy assets, quality long-term assets. So, there's not many companies that are doing this. There's not. McEwen Mining did an excellent acquisition from Primero, and long-term, there is a lot of execution risk here, and like one of my listeners mentioned, that First Majestic Silver, if things do not go well at San Dimas, there could be a lot of problems with First Majestic Silver. They may have to dilute more stock. But if they can get that mine up and running right, it's going to be good. They're going to be in really good shape in a couple of years. But the question is then, can they execute? Can they optimize that mine? Can they get it up and running right, on time and on budget, without drastically diluting their shareholders anymore? Yeah, Adrian, I really don't like buying individual juniors anymore. You can make really high returns, but you can also lose a ton of money. So I think Sandstorm Gold is the safest way, because they're going to be, they have 4 full-time geologists, and they have other ones that are consulting and that they pay some money to, but they have 4 really good, very well-respected track records in Vancouver and all over the world who have found discoveries. And so they're out looking for those cheap, undervalued royalties for juniors that are still drilling. So I think that's the best way. Plus, you get a company that has a solid balance sheet, good cash flow right now. So you're not buying a junior where, if the prices go lower, then the junior's in trouble. Again, stupid disclaimer, not financial advice. Six Sigma. That means the paper price should not hold. Well, this could be desperation on the part of Barrick Gold and Randgold Resources to cut their costs in case they think in the short term that gold and silver are going lower. But I agree with you. In the long term, there's no way it can hold. Otherwise, supply is going to have to be cut. The gold miners, as I've stated at length with my case study video on Barrick Gold, that their real costs for Barrick Gold were closer to $1,100 an ounce. Not the $765 to $815 an ounce they're claiming. Maybe in a year or two, Barrick Gold could get to those numbers, but they still have a lot of debt to pay off, and if gold prices and silver prices fall further, it was going to be very difficult for them to maintain margins, especially with the oil prices where they are. And President Trump is telling OPEC and Russia to increase oil production, and it looks like they don't really want to do that. So it looks like OPEC and the Saudis and Russia are pretty happy with where oil prices are now. So the miners have been in a bear market for at least 7 years. They did have a brief rally in late 2015, early 2016, and so that was some people call it a stealth bull market back then. Some people call it a bull market. I would just call it a bear market rally. But one thing is for sure that a lot of those mining companies, even the best ones, a lot of them went back to the capital markets and they did big capital raises. And unfortunately, I see the same thing happening if gold and silver do have a big rally, is a lot of miners out of desperation will go back to the markets and capital raise almost immediately. So if the gold price goes to $13.50 again or higher, silver price goes to 18 or 21 or higher, there will be big capital raises. And as a shareholder, in the short term, that stunts your stock price. In the long term, it depends what management does with the money. Buy 100-ounce silver. You don't think that John Paulson knows what he's doing? I think the problem with Paulson is that he has a lot of capital, and putting a lot of capital into gold and silver doesn't work, because then you can only buy the large companies. Okay, so if John Paulson had less money, he should have bought like Franco-Nevada, a stake in Franco-Nevada, or a stake in Royal Gold, or a stake in Wheaton Precious Metals, or a stake in Osisko Gold Royalty first. Or what he should do, and I'm surprised we haven't seen this yet, is another billionaire go and take a couple $100 million and form their own royalty and streaming company, because that would be the most efficient use of capital. And a lot of people don't like the royalty and streaming companies, especially the miners don't, but the royalty and streaming companies, unlike the bankers, are flexible. So if you have debt on your balance sheet and you're a miner and you owe the bank a certain amount of money, the bank in most cases will not be flexible with your debt. There are some exceptions to this, but the royalty and streaming companies are a lot more flexible. They're willing to amend the deals. It's not always on good terms, but it's better than bankruptcy. And so, you have some cases. The bankers have been more lenient, though, to the shale oil producers. There was a lot of shale oil producers that had drastically violated their debt covenants, but, the miners, they were not as lenient. At least in the past, they weren't. Maybe they'll be this time, because they still need the metal delivered. Okay, so I am going to read through more of your comments and then take a swig of water, and then probably I'm going to 5 more minutes. Answer listener questions. ProBrem, what do you think of investing in the Van Eck? Is it junior miner ETF? I haven't not looked specifically at what they own, so I cannot comment on that. But John Hathaway and the Tocqueville Gold Fund, they actually have geologists on staff. So that is a mutual fund, but they actually have geologists, and they've owned Franco-Nevada. So they've had more winners, I think, than some of the other gold fund managers. They tend to find value added. I think right now, though, the 5 largest royalty and streaming companies are really cleaning up because they're the ones with the best balance sheets, the safest cash flow, the best margins, and they have tons and tons of deals to choose from. Now, Sandstorm Gold, the shares have not gone up, but they also have, over the next 5 to 7 years, the most growth. So the market right now does not think that the asset in Turkey will get developed. They are not pricing. The market right now is not even pricing in the Cerro Moro gold and silver stream that Sandstorm Gold has coming online in January, and that's going to be the single largest source of revenue for Sandstorm Gold. So in spite of what the gold and silver price have done, Sandstorm Gold's going to grow its revenues by 20% in January. And the market's not pricing this in, a 20% growth in revenues and earnings, because their margins are not going to get hurt. So that'll be good. If that comes online and the Sandstorm Gold shares don't go up, that'll be a buying opportunity for the stock. But more importantly, from an operations standpoint for Sandstorm Gold, hopefully they'll be able to go out and get a lot of deals. If the market's not going to value the company that well, maybe the other assets that they can purchase are not going to be valued that well, and they'll have more cash flow to go buy those cheap quality royalties on juniors, on large land packages in the long term, and then also use some money for more cash flow deals. So I'm hoping, obviously not financial advice, and this is forward looking, but I'm hoping that before that one of the lowest cost gold and copper mines in Turkey comes online in 2022, that Sandstorm Gold has 30 other assets online generating cash flow. That would be at least 30. That would be best case scenario for me. If they have 30 other assets online generating cash flow, they have like $80 or $90 million from other investments that have come online, and then they have the Turkey asset. And then I think people will look at that company a lot differently than they are right now. Because there's still like a really negative perception about the company, even though their counterparties are much better. There's still a lot of people that think that all of Sandstorm Gold's counterparties are junior miners, but it's not true anymore. Their counterparties are mid-tier miners and large producers. And it's getting better every year that they have better counterparties. So I think management's not getting the credit for changing the culture at the company, their investing checklist. And I think eventually that will win out. They are buying back shares with free cash flow, though. And Nolan Watson just said he just put another 50% of his annual base salary into more shares. Him and his wife own a ton of shares now. So I think over the last 3 or 4 years, they've bought over $10 million worth of shares on the open market. He disclosed that in a public interview. He said that him and his wife own $13 million worth of stock, and he plans on buying more. And he just bought more. He just put 50% of his base salary into more shares. So in the short term, the stock may go down. In the long term, I think he's building the company the right way. Adrian, government is bad. Maybe that commenter collects welfare. Yeah, you could be right, man. He's probably not libertarian. There's people who want gold and silver exposure who hate libertarians, who don't like anyone who's Republican or pro-Trump. So anyone who's criticizing the government, but they still want to hear about gold and silver. There's a small percentage of my audience that's like that. Daleept, I think I screwed up your name. 50% or more of government is redundant. Agreed. Plus, there's all these laws on the books for fraud and waste. All these laws for fraud that are not being enforced, okay? Just enforce the laws that are already on the books, okay? If a federal employee is stealing money, and I've heard these stories from friends, off the record, at different government agencies, and they've been even in the papers. There's been federal government employees that have used, like, government credit card accounts, their government, like, petty cash or their, like, agency credit card accounts to, like, for hookers, to steal money, like, exorbitant lifestyles, over 6 figures a year in theft, and a lot of them don't even go to prison. A lot of them are not even fired, because they're in multiple government employee unions, and they're protecting them. It's sad. Most Americans are not aware of this. So most Americans, if they actually see the Project Veritas videos, the last couple ones last week, the 3 ones last week, if they even see them at all, they would think that that's an exception to the rule. I'm telling you, there's that bad or worse. Now, not all of them are Democrat Socialists of America types, but a lot of them are, like, committing crimes and or lazy or not doing work or illegally using government resources. And they're brazen about it, that they'll never get fired. Not that familiar with Fortuna Silver. I know they're a pretty solid mid-tier, but they don't produce a lot of silver, so that's the reason I did not include Fortuna Silver in that video, was because I was focusing on the larger primary silver miners, because they actually affect the silver supply. And so for Fresnillo and Pan American Silver, which are the 2 largest and lowest cost ones, you know, they are adjusting earnings. Red flag, it's not once. They're adjusting earnings multiple times. So they're doing that to hide some losses that are starting to mount. They're understating their all-in sustaining costs because they're non-GAAP. So they're having problems too. They're not going to go bankrupt, but they are having problems. And the larger silver miners like Hecla and Coeur d'Alene, those guys are higher cost, and there's always waste there. And normally with Coeur d'Alene, there's massive dilution, although I haven't seen recently, but they have a long history of stock dilution. Okay, guys, well, that's it for now. Like I said, I have to keep this video, and I'm going to get out of here and get to the gym, and I'll talk to you guys later. Okay, bye, everyone.